let's try to take a lot of these elements of what you do in a hedge fund and put it in a public vehicle, because you're doing it for 90 bips, no carry, and this is something anyone can buy. So it's like a long-only levered hedge fund strategy in an ETF focused on cannabis with a team that's dedicated to the space.
Welcome to Seeking Alpha's CEO interviews, informed conversations with the best and brightest CEOs in the publicly traded markets. Quality of leadership is a decisive factor in stock performance. Our show provides intimate and in-depth investing discussions with industry leaders across all sectors of the marketplace. We publish excerpts on social media platforms and the full conversations on seekingalpha.com or on our highly rated Seeking Alpha mobile app under CEO interviews.
Welcome to Seeking Alpha. I'm your host, Jesse Redmond. Today, I'm joined by AdvisorShares CEO, Noah Hamman, and Poseidon co-founder, Morgan Paxhia. Gentlemen, thanks for joining us.
Thank you.
Thank you.
So I'm excited to talk about the Poseidon ETF, and I thought a good way to get started is maybe, Noah, you could give us an overview of the AdvisorShares business, the ETFs you manage, and maybe update us on the new one you launched today as well.
Absolutely. And I'll do both. I'll give you an overview and I'll overshare. So we are, with the new launch today, 24 exchange traded funds, roughly 2.2 billion in assets under management. And absolutely, on today, February 9th, excited to launch a new ETF. It's tactically managed. The ticker symbol is LETB or LETB. That's kind of a play off of this Let Bob platform that is AI automation trading platform that they're taking that technology and putting it into an exchange traded fund. And it just simply blends, both fundamental momentum. It's looking at sentiment, companies that should be expected to exceed their earnings expectations, but with a technical overlay for risk management. So they'll get tactical, they can move to cash, they can move aggressively to cash. And then through stock selection, they want to be able to outperform the market over time. So we're excited to get a new manager out into the marketplace, and we'll see, how they do as we get started today.
And you seem to, lacking for the right word, but you seem to have a unique focus with your ETFs. You do things, you have the hotel ETF, you have a suite of cannabis ETFs, you have PSIO, which is focused on on psychedelics. How would you describe the type of ETFs that you're interested in, and why do you like these spaces?
So for us at a high level, it's all active management. So we work with guys like Morgan, who have a view in the markets. We're not against, passive management or indexes. Those are totally fine. Beta in your portfolio is always a great idea, but just where we have our experience and expertise and our passions is around active management. And then with that, we wanted to do it in a variety of ways. Again, one, work with talented managers like Morgan, or see where in areas with certain themes like hotels or like restaurants, the EATS, EATZ ETF would work from a thematic perspective. We feel like, and what we're seeing is investors are changing the way they build portfolios, right? It used to be sectors and style boxes, and themes has continued to grow. So being able to provide what we think are some smart, could add some alpha overall to your portfolio when you plug it into a broader allocation. So really building a little bit of both, all under that active theme.
Great. And Morgan, tell me about who is Poseidon and what's your core business?
Yeah, well, thank you for having me. Poseidon is a cannabis-focused investment firm that I founded with my sister back in 2013. Over that time, we've raised and deployed a couple private funds, a couple SPVs or several SPVs, and most recently in the last year, we became SEC registered, just given where our firm was heading from a size perspective, but also so that we could become 40 Act fund managers, and launching this product with AdvisorShares. So, the way we look at Poseidon is we're becoming quite a well-rounded asset management platform where we have a public-facing vehicle, we have private funds, we have, a lot of different offerings, but super focused all on cannabis and hemp. But that is our pure focus. It's all we do. It's all we've done since 2014 when we opened the first fund. And that's, from our perspective, when we were looking at the creation of Poseidon, Emily and I, we have a family background. We lost our parents to cancer, and our father going through hospice care. A nurse had offered to get him some cannabis. At the time, was highly illegal, upstate New York, still plenty of stigma. And so kind of planted that seed for us. And then, as we started to see the industry, or at that time, there was no industry. It was just this highly gray market, especially here in California. But Emily was like, this is going to become real. From her background, she's like, this is going to become something sizable. This is going to be CPG. There should be brands. There should be a big industry around this. What do we do? So we had this like feeling of a passion from a family perspective, but then also from a capitalist perspective. And like, what better drivers are something that, you feel like you're doing something so important from a family perspective, but then also something when you looked at the world, especially then, obviously the world has done phenomenally well in a lot of risk assets, but we just were like, this is where we think over the next 10 years would be a fantastic opportunity to focus, and where there was just a dearth of capital. And so that was really the kind of the framing around why we did Poseidon. And, a lot of that's played out. Obviously, capital markets have done way better than I think any of us thought was going to be the case back then. But, maybe we're coming back around. This time's our time to shine. And that would certainly play through with like Gartner hype cycle, or, as we've derived with the Poseidon Cannabis Alpha Wave, derivative of that, where, you had that first euphoric wave, which we all went through and had the painful subsequent, but maybe it's our time to shine while other risk assets may need to digest and go through a different period.
And there's 3 PMs on Poseidon. Is that right? Yourself, your sister Emily, and then Tyler as well. Are you guys all co-portfolio managers?
Tyler Greif. Yes, on the ETF, that's correct. Yep.
Okay.
We're all 3 of us are investment managing, on the ETF, and Tyler does a tremendous amount of the work, and yeah, it's all 3 of us together.
And Noah, you also have some other cannabis ETFs. You have MSOS and you have YOLO. Can you share why you started PSDN and how you found the team?
Sure. Well, so for us, it actually goes all the way back to our Vice ETF. That one has a ticker of VICE, and it was the first one we actually wanted to try to get some cannabis exposure into, and then learn sort of some of the custody challenges we were going to run into along the way. And so the interesting thing is going way back to that product, really even before, we'd actually looked back at building something in the cannabis space, I want to say as early as 2014, but just from an investment company perspective, wasn't really investable at the time. And so in that process, right, of figuring out some of the challenges, looking at the space, starting with Vice and then launching YOLO and then MSOS, we did a lot of research and a lot of education and followed a lot of smart people in the space, certainly particularly from an investing perspective. So I was already well aware of Morgan and Emily at Poseidon and watched their stuff and, read their content and followed what they did. And so they're one of the, handful of people we really learned a lot from in coming into the space. And so for us, just conversations, connecting, things like that, we knew 2 things. One, we like to align ourselves with, good, kind, smart, intelligent people. 2, we wanted to build more in the cannabis space because we had seen some success with the products we had built where Dan runs them. And so trying to figure out what could we build that would be complementary, that as people came to AdvisorShares to look for different cannabis or other thematic ideas, what they might be interested in. And one conversation led to another. And so, with Poseidon and PSDN, that ETF, it really adds this complementary component of having the ability to have leverage exposure. So for those looking, for that into their portfolio, it's a great solution for them, coupled with an outstanding management team and really nice people to work with. So for us, it was a no-brainer.
And Morgan, one of the ways that I think PSDN is differentiated is by its flexible mandate. Can you talk about what this means and what degrees of freedom the fund offers?
Sure. Well, first, I would like to thank AdvisorShares, Noah, particularly for working with us on PSDN, because we looked at a lot of the other platforms out there, and we just think what they are doing is very smart. Drilling in on these thematics. Totally agree with this concept of having active share in here with ETFs, and so that was a really good fit for us. And I think that was I think Noah's a very modest person because they've done phenomenally well with what they are doing in the cannabis industry. Just with their various products to this point have been so meaningful to this industry. And capital is a change agent, right? And they have done just a tremendous job of getting capital and deploying it in our industry where so few have been able to do so, and bringing that institutional capital in that they've seen come into their products already, just is really, really important for our industry's sake. And so when we were looking at launching PSDN, similar to Noah, like I had thought about an ETF a little bit later. I was thinking about it from 2017, and it was still early. And it was really because of the launch of MSOS with that pure focus on US, and then how they were doing it. I know they were already doing swaps before that, but when they really were focusing in on that, I was like, oh my gosh, this is a real opportunity to do more in this space. And then it was Tyler who was, last year said, hey, like, now's the time. If we're going to do this, let's do it. And we're like, great. And at that time, the markets had already come down, I don't know, probably 20% off their highs. We're like, this is perfect. This is great. We're going to start this process. By the time we're launched, we'll be through this market correction. We were a little early on that, but such is life. We're timing a market is impossible, right? But so what we were thinking about with the creation though of PSDN was, what could we do differently? What could we do that was complementary? We just didn't want to come out with a same thing, right? So, and so we were just looking at the space, and you were like, well, we've been running a strategy for years already in this space. Like, our first fund has public and private, and we were managing public equities since 2014. So, which was, a story for another day. Actually, some really fun conversations with Jason Spatafor, because he's one of the other few that was actually managing or running, portfolios, and still is today, and has been through this whole maturation. But so when we're looking at that, we're like, let's try to take a lot of these elements of what you do in a hedge fund and put it in a public vehicle, because you're doing it for 90 bips, no carry, and this is something anyone can buy. So it's like a long only levered hedge fund strategy in an ETF focused on cannabis with a team that's dedicated to the space. So we thought that would be a very differentiated offering versus what was out there. We thought it was highly complementary to the AdvisorShares suite already. And so if anyone that's been following us, even since just our launch in November, has seen quite a bit of transition through this fund. We've done a lot of work already, because again, this is what you do when these markets are doing certain things. We're active, we're going to remain active, but having that additional component of the leverage, we think, is just a great differentiator and amplification potential, right? I mean, it certainly adds risk, but we're like, a lot of people are looking at this space, are generally accepting of a certain level of risk already. So this could be another way that they may want to complement a portfolio that they're doing in the space. So that was the overarching genesis of it. It's not like it's anything new to us. This is just taking something that was basically been digesting for years and years, and successfully on the private side, and putting it in the public.
And what kind of stuff is in the portfolio today? Can you kind of give us an overview of what the holdings look like?
Sure. Yeah, well, again, this is February 9th, 2022. So just time stamping this because I think it's important, where when we launched, it was a much broader portfolio. It had some US names, US multi-state operators. It had large mids. We even had some ancillary technology names. We had some international exposure. But the markets had just continued to come in pretty aggressively. And anytime in my career, I've been an investor for a long, long time. Tyler's done this as well. And, when the markets really get down to such extreme points, you want to go with your highest conviction, or at least that's how I've always been taught, is lean into your most conviction and just get rid of everything else. And so that's what we've done. And so we are 100% at the moment, 100% focused on US multi-state operators. The largest in mid-size names, I'd say, is where we're focused. It's 100% there. We've been bringing our leverage component up. By the time this airs, we should be, so this will be after the fact anyway. We're about 1.2 times leverage. So we've been aggressively adding into this rally. We'll see if it's durable, but wanting to make sure that people that are buying PSDN are getting what they thought they're getting, which is getting that additional upside potential with that leverage. And so that's where we are today.
And last I checked, you were in about 10 MSOs that were about the top 10 measured by market cap. Is that still reasonably accurate?
Yeah, 10 names. Yep.
Okay. And maybe
there's only a couple MSOs that we don't actually have in the book. So, right. But otherwise, yeah. And that's part of the active. We could have more, but we're just really just those are the 10 that we're highly convicted on.
And for investors that might be listening that aren't super familiar with the cannabis space, can you give just a brief overview? What is an MSO, and maybe just explain an example of one that you like to talk about?
Do you want me to keep going, or do you want to know?
Yeah, sure. What I'll go to Noah next, but Morgan, why don't you take this one?
Okay. So yes, good point. Jargon is aplenty in cannabis already. So MSO stands for multi-state operator. We've been investing since before that term existed. One of our earliest multi-state operators was when they were in one state, before a single state operator was even, or a super state operator, all this jargon. Anyway, multi-state operator, that's what that means. So basically it's very self-explanatory. It means because cannabis is still federally illegal, every plant touching operator in the US has to operate in each state individually. So if they are in New York State, then they have production there, but they have retail, let's say they also have retail in Illinois, they can't send product from New York to Illinois. So you have to build it and contain it within each state that they want to operate in. And hence that's why if you're in multiple states, you become a multi-state operator. And that's where the genesis of MSO came from. It was very early days, like we were in GTI with our first fund back in the day when they had 30 employees in one state. Obviously, they have grown many, many, many times since then. And now it's the norm to call MSO multi-state operator. And that's even been, now there's tier 1, tier 2, tier 3, which is I know, and tier 4, which is actively discussed in the market. There's Western focused markets, there's Eastern markets, there's some that are all over, because being this federally, still being federally legal, it is really interesting to watch how each of these states are evolving from a regulatory standpoint, from a growth perspective. A licensure has all these major impacts on their top line growth rates, what their gross margins and EBITDA looks like, what are the competitive landscape. So it's a highly nuanced space. And I think that's why it's very important that, from our perspective, why I think it's, being so focused on it really matters, because it changes all the time. I mean, we always are saying that, cannabis, the only constant is change.
And Noah, when I'm building a portfolio of cannabis stocks, it's kind of a pain because I have to deal with OTC markets, and they tend to be, at least in the US, if I want to access these stocks, they tend to be listed in Canada, and then have a dual listing on the OTC markets. And not all investors can even access OTC stocks. I know on Robinhood, you can't access them, and on other platforms, it's expensive or otherwise difficult. So one of the really cool things about your vehicles, and this includes PSDN, is that they're NYSE listed. So basically anyone can get exposure to cannabis without having to jump through these hoops. Can you talk a little bit about how you're accomplishing this in terms of having the NYSE exposure or NYSE listing with the OTC exposure?
Sure. I mean, I would describe it maybe in two levels. One, just the idea of trading or investing in things that are OTC traded, not listed here, but trade on a regular exchange somewhere else is fairly common. And you have that in cannabis, they're listing in the CSE, but OTC here, you actually have that in an area. This is one of the early products we built, which was an ADR ETF. Then you have this concept of sponsored and unsponsored ADRs, and all unsponsored are trading OTC. But nonetheless, the underlying stock trading on an international exchange, listed, liquid, all of those things. And that's a little bit of what we have here with the cannabis stocks, right? They're kind of almost like an unsponsored ADR. So liquidity is more driven by, where its original listing is maybe than it is from an OTC perspective. You really want to take those two together to look at the true size and liquidity. But this one was more complicated because of the cannabis component and the custody challenges, with the federal e-legalization currently. So it was really just trying to find a way, how do we get access to these OTC stocks that, and I think in almost every case are plant touching stocks. And then, how can we deal with the custody aspect of it? And so, that's where the swap component came in to kind of deal with that, allow us to have access to those OTC stocks, put them into an investment company product. And that really fixed the custody things, but it didn't fix, the challenges that are associated with, things like liquidity, right? That's still going to be a big challenge. A lot of the companies that we're talking about in this MSO space, they're micro cap, small cap. And so that's a challenge, right? It's not exactly the same as an unsponsored ADR that's trading millions of shares on an international exchange. These are still, stocks that are in their early growing stage.
Right. And Morgan, one of the differentiating components of PSDN is the fact that you can use leverage. You have the ability to go up to 1.5x. And over the first few months, you've been, I think, as high as 1.3 ballpark. And more recently, you've been essentially unlevered. Can you talk about what goes into deciding how much financing to deploy and what investors might expect moving forward from the leverage component?
Yep. Certainly going through the early life of scaling the AUM, there was two factors that rapidly brought our leverage down, where we went from 1.3 down to 1. And Noah, check me on compliance here if I'm okay to go into this much detail, but one, we went 100% to the MSOs, right? So there was a day where we said wholesale, where, as I mentioned before, high conviction, we just sold out everything else. So we had as much dry powder as we could to go to the MSOs. And we did that, right? We sold out and have been adding ever since to that. And then we had a really nice influx of capital. And so for when you have a smaller AUM, when you have those creations, those can be like 15% of your outstanding all of a sudden comes in. Fantastic. And so we were, we continued to deploy as that creation comes in. So, where we are today, we're going to be a lot tighter, I think, going forward with our range, at least because our view from here is like, we don't want to be perceived as market timers. Our intention is to be more longer term. If we believe, we've got the positions where we want them to be, we think there's fundamental value in having more exposure, then we are going to do that. And we want to be more stable around that. It's not meant to be like 1 week to the next, going from 150 to 80 to 1. We don't want to be doing that. And I certainly hope the market will appreciate that. That is not our intention. We do want to be more focused with that as well. So, the portfolio went through a nice change as the markets changed, but now we feel like we're in a much better place. So the portfolio is going to become, a bit more focused, at least for now, with its positions. I think we have a lot of room to run with this portfolio. And then similarly with our leverage component, where we'll get in a much more focused range, and people will see this over time. And so and that way they know, if they're interested in what PSDN is doing, that they should be their expectations should be aligned with what we're doing, which is to provide a better range on that leverage component.
Is there any specific numbers you have in mind for that range? I know you can go up to 1.5x, but and if you don't want to get specific, that's fine too, but is 1.2 or 1.3 kind of a ballpark of where you see things right now?
Yes. Yep.
And I got to imagine the answer changes, right, Morgan? I mean, to the extent that we're seeing momentum shift, well, you're going to be likely going to be on the higher side of that range. But, if we see something sort of back away, you're going to probably be back at that lower end, which makes it hard to sort of answer what's your typical range, because that'll be a real active decision. And if it's okay, I definitely want to point out something about, how Morgan uses leverage in PSDN. It's what I'd call, I don't know if this is the right phrase, but it's good from a marketing perspective, smart leverage. And what I mean by that, probably most of your viewers are used to and familiar with ProShares and Direction, and they all have leveraged ETFs. But the thing about that leveraged ETF, or all those leveraged ETFs, they rebalance every day. So their investment objective is one day. That's likely how people should be using those funds on a day-to-day decision basis. But this leverage is different. Morgan's not forced to rebalance. He's not forced to be at a set level. And so you're going to have that leverage over time. And so you should see sort of better mental expectations of where you think the portfolio will be, where you don't always see that in products that have leverage but have that daily rebalance. You think, over time it'll be double, but that doesn't always work out. It rarely works out that way, quite frankly. So it's important to know that when Morgan is talking about leverage, it's true traditional leverage, almost like you would have in your own brokerage account. You'll carry it over time, adjust it when you need to for risk management, but it'll look more like that than what people are used to in other ETFs.
And Noah, when you're talking to prospective investors, how do you help someone decide whether MSOS, YOLO, or PSDN is the best vehicle for them?
I mean, it's easy for me. YOLO's global and single beta, right? So designed to be single beta to the market. MSOS only US focus, same thing, single beta. And then PSDN is global with the flexible mandate, right? So as he talked about, they're much more lean towards MSOs to the US market right now, but with that leverage component. So for us, that made sense, right? Likely if you're an investor in the cannabis space, you're comfortable with that level of risk. So the idea of having that leverage as a choice is really, a good one, I think. And I think it'll be attractive to people who are in the space, right? Not to throw 100% of their portfolio in. In fact, if anything, it allows them to maybe put a little bit less, but still get, more of an amplified effect. So that's really the kind of the three things that you make. And I still wouldn't leave out Vice, right? If you want to invest in the companies that we think maybe over the next decade are going to be very active in the M&A space, you're going to find those types of companies, in the Vice ETF. So really, we try to talk about all four, depending on what a person's view and risk tolerance is.
And Morgan, for investors that are listening today or watching today that are looking to build a portfolio of cannabis stocks themselves, what kind of advice would you give them? What type of diversification matters? How many names might you own? I'm looking outside of PSDN right now, just trying to help people that are building individual portfolios. What advice would you give them?
Yeah. Well, there's a few things. I mean, structurally, there are challenges, right, with going direct because you are buying stocks that are traded over the counter. And unfortunately, we see this all too often. People are not putting in limit orders. Maybe they just dump a market order in and that the price goes way up and they get a terrible price. So there's structural challenges. The liquidity may not be there where they might think it is. So, when times are great, usually means volume is great. But then when we've seen this, the trading volume expand and contract massively. And if that happens to you in an adverse time and you're trying to sell, similar challenge where you might get a terrible price. So just kind of a word to the wise about thinking about, there is risk still. This is an emerging industry. There's some structural challenges. So, that's where the ETFs, I do think, whether or not, whatever you're trying to express, you at least have a New York Stock Exchange listed securities. And this is, I know, just talking about the plant touching assets. I know like the ancillary technology companies are NASDAQ traded. Leafly just started trading, a couple days ago. Well, post this back. So you have like Leafly, Weed Maps, and then the hydroponics names that anyone can buy those. That's a lot different. And you can see that in the trading volumes, right? I mean, it's usually like a multiple of volume traded on the exchanges versus these names. And so that's where I think these ETFs actually are a very helpful tool for folks that want the US exposure. If you want to buy the Canadian LPs, same thing. Like Tilray trades, I think 20 times the volume that like Verano trades, right? And substantially different business profiles. But because of that structural difference, it can be a lot easier for folks to participate in those names and not feel that impact that they might see if you're trying to do plant touching. Otherwise, we've been actively managing portfolios for years. So I'm comfortable getting down to a portfolio of 10 names. I think that's probably a lower bound from a risk perspective, because there are systematic risks, right? When you're talking about single name risk becomes more amplified with less names. Great example of this is let's say if you only had 5 stocks in your portfolio last year of cannabis stocks, and one of them was a California operator, and you could have been down 80-90%. Really hard staying power in an industry, or really hard to, for your process, if you have 20% of what you own, potentially, if it was an equal weight, be down that significantly. That can be a very hard thing for investors. So I just like to, 10, 20 names, nice portfolio. Great thing is you can have an ETF that can get you a basket exposure already, and then you can complement it yourself if you want to do some additional things. There's a lot of beta in this industry. So, for a lot of folks, it's just, being mindful of the structural challenges and not get too caught up in some of these movements, because these things do move around like crazy, right? I mean, some of these names are already up 40, 50% this year. if you try to sell that if on any size, is it really up 40-50% is another question. So, there's peel back the onion a little bit, design a process. It's always good to have a process. It's always good to have a plan when you're doing this kind of stuff, whether it's emerging or big markets. I mean, look, was it 2 weeks ago, Facebook was it 200 billion in market cap, and Amazon was up 200 billion market. I mean, the markets are very dynamic on a broader scale. We've seen high-tech, high-priced growth stocks get hammered too. We've seen crypto. Things are all over the board. So it always kind of comes back to grounding yourself. If you're going to do it yourself, come up with a good process that you're comfortable with, a risk exposure you're comfortable with, because we don't know, right? I mean, nobody knows where markets are going to go. We do have beliefs over longer time horizons, and that's what we really try to think about, is especially with these names and thinking long-term horizons. Yeah, we're trying to manage through shorter term because we got to manage through the short term to get to the longer term, but we have a process, right? We've been doing this for a very long time. And so I just try to extrapolate that for folks too, to have their own process too.
And Noah, it's been a brutal last year for cannabis investors. I think nuclear winter is the term I've been using lately. Give us some inspiration. What excites you about the future of cannabis investing, and why might now be a good time for folks to get started?
I mean, for me, it's easy. Revenue growth, right? Quarter over quarter for most of the companies, not all. Lower cost of capital, right? They're refinancing at lower and lower rates. More states legalizing in some way medical and or adult use. And so states are all moving much more aggressively than the federal government is. And something's coming federally. I don't know if it's next month or in 2 or 3 or 5 years from now, but something is coming. It's going to come our way. I don't believe that ship really is going to turn around the other way at all. Again, could be delayed. So I have all these tailwinds, in this opportunity. The only thing that's not working is really price action, but everything else is working. States are coming online, the margins, everything. And the price action for me is just a function of there are also plenty of people who can trade these OTC stocks, and they are active traders, and they can trade them long and they can trade them short. And, a little bit of hedge fund money can go a long way in pushing these prices. So I try to not let, pricing be that thing that, would cause me concern if I'm looking at it from the long term. And I think that's how you have to invest in the space, unless you're a trader, trade away. But long term, this is, it has all the right things for me that says this is an early opportunity. I know it's going to be a volatile ride, but I believe it's going to pay significant, dividends in terms of my overall portfolio.
Yeah, and one thing I've been noticing is that if the fundamentals were in fact broken, we would be seeing credit rates being higher, not lower. And so to me, that's an indication we're suffering an investor demand problem, not a fundamentals problem.
Right, I would agree. And our own experience with MSOS ETF, in spite of the price action from last year, you can see outstanding shares have, remained consistent and or been growing at times. So it does feel like, between MSOS and PSDN and YOLO, it's attracting shareholders who are looking at it in the same way. They believe in the space. It's a long-term hold. They've bought in, they've put it away. The people that are actively trading are probably dealing with the individual names anyway. So, knock on wood, except for the price action, so far, so good.
And Morgan, I'll give you the final question. What are you most excited about for 2022? What are you looking forward to this year?
What I'm looking forward to is our industry showing its strength on its own. And what I mean by that is I'm not expecting any federal progress this year. And I'm excited for our industry to prove that we're going to keep going without it. We've done this year in and year out, but I feel like this is a very critical year to prove that we will continue forward. We will soldier forward. We are going to take an industry that when we started Poseidon, there were $0 in adult use legal sales. To this year, I think we're getting close to $30 billion in just the United States alone. And we're doing this in the absence of any federal support, if anything, federal headwinds, because of what our president did immediately upon his starting this term, was firing staffers over testing positive for cannabis. Sent a horrible signal, and it sent a big chill across our space. Institutional capital that was getting comfortable. Obviously, there were some prime custody issues that also exacerbated that. Anyway, here we are today, and I feel like we have continued to prove good growth rates, ability to still access capital. It certainly is concentrating that power, unfortunately, because of the absence of any kind of federal support. But the industry is finding its way and will continue to grow, and new markets will open. So I'm very excited about New Jersey opening. I think that is going to be one of the best perception boosts we've seen in a long time, because it's such a massive population in and around the whole tri-state area. There's some doors that are very close to the New York City border that'll see just a tremendous amount of legal activity. And that's going to just rapidly improve a lot of additional growth. And just again, the actions are at the state level. That's where we see the positive actions, and we're seeing it, right? We saw it with Mississippi, right? Just become the 37th state to become medical. Fantastic. I'm hearing about Wisconsin talking about it. You're hearing about ballot initiatives because it's a midterm election year. Cannabis does do well. And every time you put it, when it can get to a ballot, it does well. I think we'll continue to prove that. So I think, from my perspective is, if we can see a good market, a good stock market, which we need for our industry's long-term health, and do that in the absence of any kind of federal support, that is a super validating point in our industry's history. And that's what I'm looking forward to.
Well, this has been fantastic, guys. Best of luck moving forward, and thanks for joining us on Seeking Alpha.
Thank you.
Thank you.